Hi everyone, hope you're all doing well, and today we're going to talk about Palantir stock, which is a stock that's been requested on the YouTube channel quite a bit. It's also one that's being covered on the YouTube scene as well. It's a very popular stock, and yeah, I'll give my opinions on it today. It's taken me so long to cover it because I just thought so many people had covered it, but I guess I just kept getting asked like my opinions on it, so I'll give it a go today. And yeah, as well as that, it's a very confusing business model. So yeah, it took me a while to like get my head around it. You know, I'm very simple-minded. I'm not ashamed to say it. You know, I always tend to stick to what I know, and with me doing that, normally I don't lose that much money in the stock market, and the stocks normally go up, and that's always what one of my rules is that I always, make sure I make money and don't lose money. And yeah, I'm very simple-minded, and this one, from my simple mind, gave me a few headaches when I looked into it. So yeah, there's a few hours research that I put into it. I'll share everything that I found out about this company. It's what I put on Patreon about 2 weeks ago. So yeah, I'll kind of give my overview on it, and I'll try to be as honest as I can. And this is what I got to. I'm not ashamed to say, like, I still find this company very confusing, but yeah, I'll try to be honest, and I think that's what my channel is built on, is like just honesty. And yeah, for my simple-minded head, it was a very difficult one to understand, and this is why I tend to stick to what I know. But yeah, I'll share everything with you guys about Palantir. It's a very popular stock. It's well talked about. I'm sure you've heard of it. Ticker symbol PLTR. So this one is actually quite new on the stock market. And I'm actually going to I actually didn't really realise that the reason why they're called Palantir is because it's named after the Seeing Stones in Lord of the Rings. If you've ever seen Lord of the Rings, you'll know what I'm on about. Saruman has one of these Seeing Stones that basically lets him see what's going on, and that's how Palantir got the name. Basically, it ties in with what they do. So basically, they have two products. One's called Gotham, one's called Foundry. And basically, what they do is they help with decision making and seeing possible outcomes. Hence the name Palantir and the Seeing Stones, for example. Basically, what happens is, I think Gotham is the one that is more based for the military side and helps them with like terrorism and other outcomes like that. And Foundry is more for companies. So one of the companies we'll be talking about that uses this product is BP. We'll be talking about them guys in a little bit, and helps them run a few numbers on certain situations. So basically, that's what the company does. I made it sound so much easier than what it is in that like 20 seconds, because there's a lot more to that, but I want to try to keep it as simplified as possible. And yeah, if I was to give it a quick kind of 20 seconds what the company does, basically that's the two products. But yeah, it was a headache to look into them. So with the information that I found out about the company, I'll go through all this. We'll do a few positives, we'll do a few negatives. So first of all, the positives. The company is currently on a bit of a discount, and as I always say on the channel, the best time to always buy is when stocks sell off, because when stocks sell off, you get them for discounted values, probably cheaper values than what you would have paid a few months ago, and that will give you more upside. And at the moment, Palantir is on a massive sell-off. Now, it's questionable whether the company is still at a rich valuation, which we'll talk about in a little bit, but it's so much better buying the company at these sort of prices than when it was at a few weeks ago, where I believe it was even like $40 plus. So, taking that into consideration, if you are wanting to buy the stock, it's probably one of the better times right now. Another great thing with this company, it took a long time to develop this product. So it took about 15 years for them actually to develop this. It's a very unique product, and in terms of like someone getting something very similar to this product, it'd be very hard because they've put a lot of research into this company, and there's been a few times where it's very hard for investors to get their head around and to raise money, because people like a bit like, I don't really get it, will it actually be that successful? So it has had a bit of a up and down pass, but yeah, we obviously they've finally got a product that does work, and it does take it's very hard for someone to come into this industry, shall we say. The next thing I like to look into a product like this is, how well is it actually doing? Is the company performing very well? And at the moment, the company is performing very well. The revenue is growing absolutely huge. And if we went on to the actual recent earnings report, it said that BP, who's one of the customers that use them as like a model customer, is basically extending their contract with Palantir. So that's a great sign. If you have a big company like BP, if someone like BP is using your product, and then when the contract's kind of running out, they go, oh, you know what we're going to do? We're actually going to extend the product that we're using with you, and even use it even more. I think that's a great sign. So I think from a point of view of like, is is the product working? Well, from BP's clear point of view, if they're willing to extend the contract, if they're willing to use it more, if they've come out and said, look, this product's actually saving our company money because it's helping us with outcomes and saving us in certain situations, saving us money, then it's a win-win situation. Palantir's, they're going to use their product more, and it's also saving BP money. So I think from my point of view, the one thing that I wanted to hear is from these big companies that are using it, because we'll talk about the cost in a second. The big thing I wanted to hear is the companies that are using it, are they loving the product? Are they still using it? Are they keeping customers? Are they spending more money? And BP for me was like, okay, that's a great sign. And it's not just BP either. There was a lot more companies that came out and said that the amount of money that they're actually spending, I think it was something like 44%, are increasing the money. Is the amount they're increasing the money they're spending with Palantir. So it's not just BP. A lot of the companies that are using the Palantir business model are then spending more and more money on it, which is a very, very positive sign. As well as having the positive sign of spending more and more money, they're also gaining a lot of customers as well. So as well as that, the money that basically, rather than having the money spread thinly between big customers, there's that many more big customers now. They're not relying on one customer to make up the whole revenue, which is a really positive sign. Another thing, the CEO. I actually really like the CEO. I've listened to him a few times, and he looks a bit like Albert Einstein. So I don't know if that's a little bit of he's as intelligent as Albert Einstein, but he's got the kind of crazy haircut going on, but he's very honest. He basically, one of the things that made me laugh a few weeks ago is that he did an interview and basically said, if this is a quick get rich quick scheme and you're investing in for stocks for that, this company isn't for you. It's a long-term investment. And I was like, okay, I really like what's going on here. And he said basically, you know what, I didn't really have any plans to take Palantir public, but because so many people invested into this company and I wanted to reward them, I wanted to take it public so they could get rid of some of their liquidity in the company. And I thought, well, so honest. So I mean, you could say that's a little bit negative, that the share price might sell off a little bit because the insiders will be selling. But I also thought, look, hey, the CEO is so honest. He went, day traders, this company's not for you, it's a long-term investment. And that's also the reason why it went public. And I like that. And I also think the CEO also has, the interviews that he does is really good. So I think I really love how honest the CEO is compared to some that just would, a Steve Burns, for example. So I think that's absolutely great. And the growth in balance sheet, so the company is going to grow absolutely huge. The revenue is looking to increase quite a bit. Also, when you look at the amount of massive companies they do work with, they can easily extend the amount of companies they are working with. So, I think at the moment it's something like 8 of the Fortune 100 they're working with. So, you can easily double that, triple that, quadruple that. So there's still a massive amount of customers out there that they can work with. Balance sheet as well, it's a pretty strong balance sheet at the moment, not that much debt, still have a lot of bit of cash. And I don't really take this as a massive positive, but some people do. ARK are buying, and obviously ARK are known for buying disruptive companies. And I guess you would say Palantir is definitely a disruptive company because of the technology they have, nothing like it, and also the amount of money that it can save companies as well. So you can see here there's definitely a lot of positives. It's a very unique product and it's still got a lot of room for it to grow. Now there is some negatives, and I'll go through some negatives that I found out of this company. So the one thing that I've noticed is they are limited to who they work with. Now, one of this is the cost. We'll talk about the cost in a second, but they are limited to who they can work with, and that is on the Gotham product. So obviously that's where they work with governments. There'll be definitely certain governments they will not be willing to work with, of course. So that will limit it on that point of view, and also because of the cost. The foundry side of it, I think I looked into it. I looked into the actual business model and I tried to get my head around the actual pricing structure. It's a very expensive product. From what I can see, it's something like your first payment is like $500,000. So obviously that's a lot, and I think that's for like one car. Now I've looked everywhere and I can't find out, and the car is basically how many people can use this product from a company's point of view, and basically I'm not sure how many people can use it, but if you were to get one car in a company to use all these services that they do use, it's like $500,000. It's not as much, as the years go on to keep up with it and the licensing fee side of it, but it's quite an expensive, product to kind of get across the line and buy. And because of that, obviously on the Gotham side of it, they're going to be limited because of the government side of it, but the Foundry side of it, they're going to be very limited to the customers that will be willing to pay an upfront fee of that amount of money. Now, Palantir's counter argument will obviously be that, you can see with BP the success that you will have and the money you'll be able to save with using this product for the big companies. But that's the thing, you're always going to be limited to the big companies out there. The average Joe, your post office down the road, your fish and chip shop down the road. I always love using the fish and chip shop example, but them sort of guys, there's no way they're going to spend 500k on a Palantir product and use Foundry, for example. So yeah, I think there's definitely room for them to grow and them big companies to come use Palantir's product. But sometimes I do like buying products that is the everyday product and appeals to a mass audience. Even a company like I'm invested in Shopify, for example, and that basically lets you go online and have an online shop. The average Joe isn't going to use that product, but it's going to apply to so many companies. Nearly every company could use a Shopify website. And I think that's a little different. Tattoo chef, everyone eats food and it just appeals to everyone. And I think that's a little different for this one. I mean, like I said, I don't think it's a huge negative, but I do like I do like investing into more companies that are more usable by the worldwide rather than just the select few, for example. And that also leads me on to the next one, which is I like to use a product. When I buy a company, one of the researches that I do, I normally put somewhere between it could be anything from 3 hours to 10 hours to even a couple of weeks work into reviewing a company. And one of the things I always like to do is I like to use a product, and I like to use a product so I can get a feel of like, oh, I like this product, I can see why it's going to be successful, and it gives me kind of confidence on the product itself. And also I like to manage that. So, if I'm using the product and I see something that changes that product and like, oh, I don't like that, then I know, like, I'm looking at management thinking, why have they changed that product to do that? Like, that's not a good thing. At the same time, if management change a product for the better, or they bring a new product out, or they update it and it makes it even better, I'm like, okay, that's a great move by management. And that's how I just like to be on top of my investments. Like, it's something really basic, but I always think that's why I've always had a track record of being very successful in the stock market, of always having, one of the quotes that always sticks in my head is Warren Buffett is, like, rule A is to make money in the stock market and rule B is not to forget that. I don't know if I said that word for word correctly, but that's the whole point of view, is like my investments that I make, I do a lot of research, I use the products, and I'm always, when I buy a stock, I'm always 99% sure that's going to go up in value. And I think that's why I've got a good record of always, I don't lose money on my investments. They always go up in value, is because I put so much research in, and I also have 100% confidence going in. Palantir, the product, there's no way I'm going to use it, and I'm pretty sure no one watching this video is actually going to use the product. I'm going to have that one guy that pops up in the comment section going, I use Palantir products, but I'm never going to use it. I'm probably not going to know anyone that uses the product. And that's the only thing, is like, if Palantir ever changed products or something went wrong with the product, I'll never know because I don't use it. And sure, I mean, I think that's, sometimes I can be a little bit, I can let that go sometimes, but that's one little negative that I do have, is like, I always like to be on top of my investments, and I can always keep up with the investment and if the company's making good decisions as well. And that's one thing, is like, I do like to use it, and there's no chance I'm ever going to have 500k to go buy a Palantir product. So yeah, I think them two tie quite nicely, and I guess it goes to the cost as well. Like, they're always going to be limited. I always like buying products that, not everyone can use it, but a good chunk of the population can use it. And like I said, there's only a limited few governments, a few limited companies that can use this product, which also I bear in mind. And also the valuation side of it. The valuation side is very rich. Even right now, I think the price sales ratio is like 40 or 50, which is very, very high. Like, I struggle with sometimes looking at Beyond Meat and I'm like, that's a 20 price sales ratio. But even Palantir is even higher than that. And I think even when I look into, like, if we run 2024 revenues numbers on it, it's still going to trade it like a price sales ratio of like 11, which is like what I'd be more willing to buy in like 2022. Now, then price sales ratios might have changed a little bit. Those were what I had a few weeks ago, so I'll probably put the updated ones for you right now. But the valuation side of it, the price sales ratio is still very, very high price. There's a lot of growth still priced in. Going to grow at a huge rate, but how much are you willing to pay up for growth? That's where at what point do you call it overvalued? And it's definitely one of the richest valuations I've ever seen, even on a massive drop. And that's one thing. And also, it's unprofitable. This doesn't bother me too much that it's unprofitable, but you just take that into mind, and it might need to raise a little bit of cash. So overall, my thoughts of Palantir is that I look in the product and I go, okay, I can see that it's been successful. It's very hard for a company to develop this. You look at who are working with them and the customers they do working with them. You can clearly see they like it, they're using it, and even more people are using the product. And I look at the company and I'm thinking, from what I can see here, the product looks like it's amazing. I mean, I don't know because I can't use it, but from what I see, the product looks like it's amazing. It's going to be a game changer. It's new, unique, and everything that I can see looks positive. I just take in consideration about me having the confidence in the product, because obviously I can't use the product, and also the confidence of it's not going to be a product that is worldwide used by every company. There's only a select few that are going to use this. And the thing is I like buying great companies at cheap valuations. And I look at this company and I go, you know what? I'll be honest, it's a great company. I've got no problems with the company. It looks like it's going to be a really great company and is something that will be needed by a lot of companies in the future. But at what point do you stop paying up for growth? You're paying up nearly in this company right now, 2 or 3 years worth of growth, and I'm like, it's a lot, and that's the one thing that I struggle with. I can get my head around this a lot, but I really do struggle with the valuation side of it, and it's like, how much growth do you pay up for? And that's one of the big problems that I do have. And if I am going to take the risk that some things that I like to, I do like to have that understanding of the products, is like, how much do I disregard the valuation side of it? And you know what? You are always going to pay up for growth companies. 100% you're going to pay up for growth companies, but at what point do you call it quits? And for me, it's normally around paying up for about a year to 2 years worth of growth. And I think at the moment we're paying up for at least 3 years worth of growth. So that's the only little problem that I do have at the moment. If you do ask me, what do I think of Palantir? Great company. What do I think of the stock? In the next 5 years, it will be higher than where it is right now. At the same time, do I think I'll be able to find stocks that might outperform this? Probably. And when I do pick them stocks, will I have more confidence in this company? Or the other stock that I pick? It'll be the other stock. So it comes to the point of view of me for where I'm at with risk to reward. And at the moment, I see there's a little bit of risk. I'm probably 80% short confident in this company, but normally I'm 100% when I go into an investment. And when I look at the reward, I think it will go up in value. In the next 5 years, Palantir, I think it will be higher in value. My point is how much will it go up by in the next few years when it's priced at, I think it's like a $50 billion company. And it's got so much growth priced in, and that's the big thing for me. So I looked at this company and I thought, it's a good company, I like the stock, I think it'll go up in value, but there's just a few things, and when I run that against the valuation as well, it just needs to go a bit lower for me. So at the moment, it's not a company that I even though I like it, I think it's a great company, I think the stock will go up in value, for me, it just needs to definitely come down for me to justify the risk to reward. And for me, if it was to go below $15 or around $15, which will then put it on a bit more of a 25% dip, then I will reconsider whether I buy it or buy into this company, and that's the key point for me. But at the moment, not buying shares, not one that I plan to own. Like I say, give me another 25% dip on this one, I will reconsider it. But I just think there's a lot priced in at the moment for the risk to reward on this one. But nevertheless, I do think that if you are invested in this one, it will do well for you and it will go up in share value. I personally just want it a bit lower, and that's my thoughts on that one. So hope you enjoyed it anyway. Like I said, I tried to just be as honest as possible with what I do have found out about this company, and these are my thoughts on it. So if you could smash the like button, if you are new, subscribe, that'd be absolutely amazing. If you do want to join the Patreon, the link is in the description, and if you do want to start buying some shares, there's a link to a free trade account where you get a free share and some other ones as well. But that's the video today, guys, and I'll see you on the next one.